Hi, I'm Kara, and welcome to the show. Today I'm sitting down with Sam, my co host, for a conversation you won't want to miss. Let's dive in.
Just a quick heads up for you listening. Our voices are AI generated, but the insights and the platform details we are exploring today, they are pulled strictly from the provided source materials. You'd think having more money makes your financial life easier.
Right, you really would.
But in reality, it just fractures it.
Oh, completely. It gets so messy.
Yeah. So today we are opening up the promotional playbooks and the feature breakdowns of two financial platforms.
Yep. Wealthfront and VestClaw IQ.
Exactly. And we're doing this to figure out the financial industry. It's like either you surrender total control of your money to a black box algorithm, or you spend your entire weekend managing these chaotic, outdated spreadsheets.
And nobody wants to do that.
No. So, welcome to the deep dive. Our mission today is to find out if there's actually a middle path for you.
Yeah, for the smart, time-poor adult who manages their own investments.
Right. You want your portfolio to feel calm rather than chaotic. And to understand what you really need, we first have to understand the messy reality of personal finance today.
Because your money is scattered everywhere.
Exactly. It's like trying to put together a 1,000-piece puzzle, right? But the pieces are locked inside 5 different boxes.
Oh, and you aren't allowed to see the picture on the cover.
Yes. That is exactly what it feels like.
It's a massive problem, and it hits a very specific demographic hard. We're talking about folks in that 30 to 55 range.
Right, because you aren't just managing a single savings account anymore.
No, not at all. You've got a primary checking account, a taxable brokerage, your current 401k.
No, and maybe an old 401k from a job you left 5 years ago.
Exactly. The one you never rolled over. Plus an HSA, a mortgage, maybe some credit cards.
Right.
The traditional methods of tracking all of this, they just start to break down under the sheer weight of the fragmentation.
Yeah, it's exhausting. Just juggling separate logins is a part-time job. And the financial industry's answer to this messy reality is fascinatingly polarizing.
It really is.
So let's pull from the Wealthfront materials first, because they pitch a very specific and honestly very seductive vision of ease.
They are the quintessential example of the automation extreme.
Right. Looking through their documentation, they offer this all-in-one portfolio of diversified index funds.
Automated bond ladders, too.
Yeah, and a cash account offering up to 4.2% APY. They even flex up to $8 million in FDIC insurance through their partner banks.
Which is a huge selling point.
Totally.
Yeah.
But their core pitch is what really catches my eye. It says, managed automatically so you don't need to talk to anyone.
Which sounds like absolute paradise.
Yeah, if you hate dealing with it.
Right. If you view wealth management as a chore, you just want to outsource. Wealthfront is a highly capable machine for hands-off wealth building.
Right.
But we need to look at the structural design of a robo-advisor. They're fundamentally built to optimize and manage your money solely within their own walled garden.
Okay, let's unpack this walled garden thing, because I'm going to push back on the appeal of that for a second.
Go for it.
For a self-directed investor, handing over the keys completely removes the self-directed part.
Yeah, you're not steering anymore.
Exactly. You aren't really managing your investments at that point. You're just funding an algorithm.
Right.
What if you actually want to be the one steering the ship? What if you enjoy setting your own asset allocation, but you just, hate the data entry?
And that's where you hit the ecosystem lock-in problem.
Right.
What's fascinating here is that a robo-advisor's algorithm is brilliant at balancing the funds it actually holds.
Sure.
But it's functionally blind to the rest of your life. It can't optimize that old 401k sitting at your previous employer.
Right. It doesn't even know it exists.
Exactly. It doesn't factor in your physical real estate either. So if your financial life unavoidably spans multiple outside institutions,
which it does for almost everyone over 30.
right, an automated platform like Wealthfront just doesn't provide a unified analytical lens.
Yeah, you end up with a beautifully optimized slice of your wealth.
While the rest remains completely disjointed, you're basically caught between their app and whatever else you have going on.
Which naturally pushes the weekend investor toward the exact opposite extreme.
Ah, the DIY spreadsheet trap.
The spreadsheet trap. We all know the misery of this ritual.
Oh, yeah.
It's Saturday morning, you've got your coffee, you sit down to figure out your true net worth.
And suddenly you're doing battle with two-factor authentication.
Across like 5 different banking portals. just to download a bunch of CSV files.
And the moment you export those CSV files, the data is effectively dead.
It's totally static.
Right. You dump it into a massive spreadsheet, you spend an hour fixing broken formulas,
The worst.
and by the time you finally hit save, the market has moved.
A credit card charge has cleared.
Exactly. Your meticulous spreadsheet is already outdated. You're trying to manage a dynamic, living financial ecosystem using tools designed for static accounting.
It just turns you into an amateur data clerk instead of an actual investor.
It really does.
So, if Wealthfront is locking your money into an ecosystem, and spreadsheets are burning you out with manual data entry, how do you actually get a professional level view without handing over the keys?
That's where the documentation for VestClaw IQ gets really interesting.
Yeah, from what I'm reading, they aren't trying to be another robo-advisor holding your money.
No, they frame themselves as a financial intelligence tool.
A financial intelligence tool.
The distinction there is structural. VestClaw is designed to aggregate reality into one single source of truth.
Okay.
Their feature breakdown notes, they connect to over 12,000 financial institutions using Plaid.
Wait, I need to stop you there.
Sure.
Because giving a third-party app access to 12,000 different bank and brokerage accounts sounds like a massive security vulnerability.
It sounds terrifying, right?
Yeah. Are users just handing over their bank passwords to VestClaw?
No, and that's a vital concern, but it
Okay.
gets to how financial technology has evolved.
Okay, how so?
In the early days of fintech, apps use something called screen scraping.
Where they literally logged in as you.
Exactly. They take your username and password. But Plaid changed the infrastructure of how apps talk to banks. It uses API tokenization.
So what does that mean for the user?
It means when VestClaw connects via Plaid, it receives a read-only token. It cannot move your money.
Okay.
And crucially, VestClaw never sees or stores your actual banking credentials on its servers.
Got it.
It's bank-level security designed explicitly for reading data, not executing trades.
Okay, so the security architecture is solid. But let me play skeptic again.
Go ahead.
Is this just another budgeting app? Because I've tried those apps that scold me for spending too much on coffee.
Right, the guilt trip apps.
Yeah. And they completely ignore my investment portfolio. They act like my financial health is determined entirely by what's left in my checking account at the end of the month.
And that gap in the market is exactly what VestClaw seems built to address.
Because budgeting apps ignore your assets.
Right, and investment trackers ignore your spending. If you have a brokerage, an IRA, and a mortgage, a budget-only tool leaves massive blind spots.
Yeah.
Life doesn't happen in a vacuum.
No, it doesn't.
Your ability to deploy capital into the market is inextricably tied to your monthly cash flow.
Because if your spending spikes, your investment contributions are like the first thing to take a hit.
Exactly. Or you end up selling assets at a bad time to cover a cash shortfall. VestClaw marries those two sides of the ledger.
Oh, I see.
It pulls in your daily banking and credit card data alongside your retirement accounts and investments. It even includes home equity as part of your true net worth.
Oh, wow. So it replaces the 5 different disjointed tools you'd normally use.
Yep, eliminating the blind spots created by single account snapshots. You're basically looking at how your overall financial engine is performing across every single cylinder.
Okay, let's get into the mechanics of how it actually analyzes that engine, because we are moving past just gathering data into what the tool actually does with it.
Right,
Right.
the analytics.
Yeah, the promotional materials talk about delivering professional-grade analytics without charging advisor fees, and I'm looking at a very specific bullet point here.
And which one?
It says efficient frontier optimization on your actual holdings, not just generic pie charts.
Yeah, that is some incredibly heavy fintech jargon.
Right. Let's translate that for the weekend investor. Here's where it gets really interesting, but also a bit dense.
So the efficient frontier is a foundational concept in modern portfolio theory.
Okay.
In plain English, it's about finding the mathematical sweet spot in your portfolio where you are getting the absolute maximum expected return for the specific level of risk you're willing to take.
Okay, let me try to ground that with an analogy.
I'll do it.
Think about managing a fantasy sports team.
Okay, I'm with you.
When you draft players, you're looking for an edge, right? You wouldn't draft a roster where all your star players have the exact same bye week.
Right, that would be a disaster.
Or you wouldn't draft 3 different quarterbacks for your starting lineup. They might all be great players individually, but together they create a massive vulnerability for your team. VestClaw basically looks at your 401k and your IRA and tells you if you accidentally bought the exact same players across different accounts.
That captures the dynamic perfectly.
Yeah.
because when your money is siloed across different institutions, it is incredibly easy to accidentally draft the same players over and over again.
Exposing you to hidden risks.
Exactly. You might think you're well diversified because you have a 401k at work, a Roth IRA at one brokerage, and a taxable account at another.
Right, you feel diversified.
But VestClaw looks at the actual holdings inside those accounts. It might reveal that your 401k is heavily weighted in a large cap tech index.
Okay.
Your IRA is holding a growth ETF, and your taxable account consists of individual tech stocks.
Oh, man. So even though you have 3 different accounts, you're highly exposed to a single sector without realizing it.
Yep, you've got hidden concentration risk. And doing that analysis manually across thousands of individual stock tickers and mutual fund holdings?
Oh, that's virtually impossible for a human with a spreadsheet.
Right. But VestClaw provides an asset allocation breakdown across all accounts simultaneously.
That's really powerful.
And it's not just doing this theoretically, it's looking at the live daily data of what you actually own.
Wait, I want to push on that live daily data aspect for a second.
Sure.
If VestClaw is reading data from 12,000 different institutions, there has to be some latency, right?
Well, yes.
Like, if the market drops 500 points at 2 in the afternoon, is this dashboard showing me reality or is it showing me yesterday's news?
It's an important distinction to make regarding the tool's purpose. VestClaw is a financial intelligence tool for wealth management, not a terminal for high-frequency day trading.
Okay, fair enough.
The data syncs occur regularly, usually daily, which is more than sufficient for portfolio strategy. If you are trying to scalp pennies on a minute-by-minute stock chart, you use your broker's active trading platform.
Obviously.
But if you are trying to understand your holistic asset allocation, a daily sync gives you the exact clarity you need without the noise of minute-by-minute volatility.
That makes total sense. It's about strategy, not reflexes.
Exactly.
And speaking of strategy, I want to talk about another feature they highlight, which is tax-aware asset placement.
Oh, this is huge.
Right, because we know that different types of investments are taxed differently. Bonds generate yield that gets taxed as ordinary income,
Right.
whereas long-term equity holdings benefit from much lower capital gains rates.
And if we connect this to the bigger picture, that's the crux of asset placement.
Right.
Most self-directed investors understand asset allocation, like the mix of stocks and bonds.
Sure, it's 60-40 or whatever.
But asset placement is the strategy of putting those specific assets into the correct buckets based on their tax treatment.
Okay, so how does that work in practice?
Well, you want to shelter those highly taxed bond yields or high turnover mutual funds inside tax-advantaged accounts, like your IRA.
Oh.
Conversely, you keep your highly tax-efficient index funds in your standard taxable brokerage account.
Because at the end of the day, it's not just about the gross return you earn.
No, it's about the net return you actually get to keep after the IRS takes its cut.
Right. But doing this optimally across a fragmented financial life is a logistical nightmare.
It really is. You just end up guessing.
Yeah.
But by bringing your taxable and tax-advantaged balances side by side in one unified view, VestClaw provides the context necessary to place assets where the tax treatment actually fits.
So it bridges the gap between professional wealth management and self-directed investing.
Exactly. This is a level of optimization usually reserved for professional wealth managers. It gives you the intelligence an advisor would use to minimize tax drag.
But you remain the one executing the strategy.
Right.
You still get to steer the ship, but you finally have a clear, high-definition radar screen instead of just, staring into the fog.
Precisely.
Okay, so now let's pivot to how this actually feels in daily life. Because the whole premise of this deep dive is finding a way to make the portfolio feel calm.
Yes.
We are trying to reclaim our weekends here. And the source materials emphasize setting goals that are tied to real balances that auto-sync.
Yeah, compare that to the alternative.
Oh, boy.
We've all tried those standalone goal tracking apps where you have to manually enter your progress.
They're awful.
You set a goal to save, say, $20,000 for a down payment. 3 months later, you realize the app thinks you're way ahead of schedule because you forgot to manually log an emergency car repair that completely drained your savings.
It's incredibly demotivating. You feel like you're failing at managing your money.
When in reality, you're just failing at manual data entry.
Exactly. But when your goals are tied to a system that auto-syncs with reality, you trust the numbers. You aren't second-guessing if the dashboard is lying to you. And this flows directly into what VestClaw offers in their premium tier. Alongside a personalized risk profile and priority support, they feature these smart alerts.
And these aren't just notifications that your credit card bill is due.
Yeah.
They are alerts for when your portfolio drifts from its target allocation.
I think this is where the behavioral psychology of investing really comes into play. Because without an alert system, how do you know when it's time to rebalance your portfolio?
You don't. You log in, you check the balances, you obsess.
Yeah, you become a slave to checking the accounts every single day just to make sure nothing has gone off the rails.
But the smart alerts change your fundamental relationship with your portfolio.
How so?
Well, imagine your target is to be 70% in equities and 30% in fixed income.
Huh.
We experience a massive multi-month market rally, and suddenly your equities swell to 80% of your portfolio.
Right.
VestClaw send you an alert notifying you that your portfolio has drifted, and you are unknowingly taking on more risk than you originally intended.
So what does this all mean for you? It means the true value of the premium tier isn't just the deep analytics.
No, it's the psychological benefit.
Right. The system acts as a guard dog. You don't have to check your balances every day. The app watches the portfolio drift for you.
Exactly.
It basically gives you permission to look away from your phone and actually enjoy your Saturday.
It transforms a chaotic, anxiety-inducing chore into a calm, managed process.
Yeah.
By spotting spending trends and providing allocation alerts, the tool inherently respects your time. It gives the self-directed investor the clarity required to make swift, strategic decisions without getting bogged down in the mechanics of data gathering.
Because you spend your energy acting on the data rather than compiling it.
Exactly.
And that is the ultimate difference between being an investor and being an exhausted data clerk for your own life. Nobody wants to spend their Saturday fighting with a spreadsheet.
Definitely not.
Now, if you want to set it and forget it completely, and you are comfortable having your investments managed entirely within one ecosystem, an automated solution like Wealthfront is an undeniably powerful machine.
It is. But if you want to remain in control and you have a messy, real-world financial life with outside retirement accounts, mortgages, and varying cash flows.
Trying to manage that manually is just a recipe for burnout.
Absolute burnout.
Which is why this middle path, using a financial intelligence tool to aggregate, analyze, and monitor, makes so much sense. You maintain ultimate control of your money, but you outsource the tedious data aggregation.
And the complex optimization math.
Right. You get a unified 360-degree view of a complex financial life. You finally get to see the picture on the front of the puzzle box.
That's a great way to put it.
Well, we've covered a lot of ground today, from the structural limitations of robo-advisors to the security of read-only APIs and the hidden tax drag of poor asset placement.
We really have.
But before we wrap up this step dive, I want to leave you with one final thought to ponder on your own. We spend so much time and energy trying to organize our financial lives, desperately trying to get all our scattered data into one clean, understandable dashboard.
Yeah.
But let's say you do it. Let's say you finally achieve a perfect, unified 360-degree view of your entire financial life. Does that absolute clarity actually make you trade less? When the chaos disappears and the muddy waters finally clear, does it actually cure the itch to tinker with your investments? Or does seeing all that pristine data constantly updating and organized right in front of you just tempt you to pull even more levers?